All right, let's dive into something you've probably never thought about: the connection between ancient temples and the modern stock market. I know, it sounds a little out there, but it's a fascinating story that shows how some hidden forces can shape our entire economy.
So here's the big question we're tackling. It's a challenge, really, to look beyond the numbers, beyond the spreadsheets, and think about the invisible cultural currents that might be running the show in the global economy.
Just imagine this for a second. You've got the drifting incense and the quiet bells of the Jing'en temple, a Buddhist shrine that's been there for centuries. And right next to it, a massive, gleaming skyscraper, the headquarters of a financial firm. That contrast, the sacred and the secular, that's the backdrop for a huge financial mystery.
Okay, so that brings us to the heart of the mystery, something called the Iron Rooster problem. And for years, this has been a massive headache for investors and regulators in China's stock markets. So what on earth is it?
Well, first, a super quick refresher. Dividends are just a piece of a company's profit that gets paid out to its shareholders. Now, it's not mandatory, but paying dividends is a huge signal. It tells investors you're financially healthy, you're accountable, and you respect them. It's basically a voluntary act of sharing the success. And that's where this amazing Chinese metaphor comes in, the Iron Rooster. It's a nickname for a company that's so incredibly stingy you can't pluck a single feather, or in this case, a single dividend payment, from it, even if it's making a ton of money.
And listen, this was not some small, niche problem. We're talking huge. For a while there, nearly half of all profitable companies in China were acting like this, just hoarding cash and giving absolutely nothing back to their shareholders. It got so bad that regulators had to step in and threaten hard measures just to get these roosters to finally, shed a few feathers.
So all of this got some researchers scratching their heads. They thought, hey, if regulations aren't fully fixing this, maybe the answer isn't just in the accounting books. Maybe there's an invisible hand at play here. Maybe it's about culture.
And the way they decided to test this was actually pretty brilliant. First, they mapped out the headquarters of thousands of public companies all across China. Then they mapped the locations of thousands of Buddhist and Taoist temples. And finally, they just connected the dots. They analyzed if there was a link between how generous a company was and how physically close it was to one of these spiritual centers.
And the result? Well, it was absolutely striking. It was like they could actually see the moral rhythms of the temple having a real effect in the boardroom right across the street.
I mean, just look at this. The data is so clear. The firms that were located physically close to temples, they paid out way more in dividends than the companies that were far away. The link was undeniable, and it held up even after they controlled for all the usual economic factors. But here's where it gets really interesting. This effect was strongest in private companies. See, state-owned companies kind of have to follow government rules, but private firms, they have a lot more freedom. And in those cases, it seems like the local ethical norms, the culture, acted as a kind of informal check on the leadership's impulse to just hoard all the cash.
But wait, the story gets even more layered. The researchers didn't just stop there. They decided to dig even deeper into these spiritual traditions. So you have to wonder, right? Does it make a difference if the local temple is Buddhist versus, say, Taoist? Well, as it turns out, it absolutely does.
And yeah, the reason why is all about their core philosophies. In Buddhism, there's a huge emphasis on dana, which is the virtue of giving. The belief is that generosity creates spiritual merit, so there's a real proactive reason to share your profits. Taoism, on the other hand, is more about wu wei, or non-assertion. It discourages hoarding, sure, but it's more of a subtle nudge toward fairness than an active command to give. And that little difference explains why the Buddhist influence had a much stronger link to corporate generosity.
Okay, so let's zoom out. What does all of this really mean? Well, it tells us something pretty profound about the soul of capitalism itself, that markets are not, and probably have never been, these cold, morality-free zones we sometimes imagine them to be.
Here's a great way to think about it. If the formal laws and regulations are the hardware of how a company is run, then culture is the software. It's the operating system. These deep-rooted values about fairness and generosity, they translate directly into how a company actually behaves in the real world.
And this isn't just a theory, the data really backs it up. The companies in these more religious regions also had higher scores for corporate social responsibility, they had stronger protections for their investors, and they were more likely to provide stable, reliable dividends. Basically, the local ethics created a better, more trustworthy business environment for everyone. You know, this idea isn't coming out of nowhere in China. It ties into a really deep philosophical tradition. The sage Confucius taught that wealth you get through immoral ways is like a drifting cloud. It's fleeting. Real lasting success is built on doing the right thing. And you can almost hear an echo of that in how these generous companies behave.
Now, if you've ever heard of the sociologist Max Weber, this might be ringing a bell. His famous theory was that the Protestant ethic of hard work and thrift helped kickstart capitalism in Europe. Well, this research suggests a kind of Eastern parallel, where Buddhist and Taoist values are shaping a different but equally powerful kind of ethical capitalism.
So the big takeaway here is pretty simple, actually. This isn't about choosing between being a good company and being a profitable company. By building trust and being fair, these firms showed that having strong ethical values and taking care of your shareholders can actually go hand in hand.
And all of this really pushes us to ask one of the biggest questions in business today. Is a company's only job to make as much money as possible for its shareholders, no matter what? Or does it have a bigger responsibility to its employees, its community, and, to a set of guiding principles?
What's so powerful about this research is the hopeful message it sends. It tells us that these two goals don't have to be at war with each other. It's a reminder that our economic systems are deeply human things, shaped by the values we believe in.
So I'll leave you with this thought. The opening bell on the stock exchange is loud, for sure, but maybe the quiet bells of a temple nearby are just as important. To really understand if a company is healthy, maybe we need to look past just the balance sheet and try to understand its soul.